Chief European Economist at Societe Generale, Klaus Baader. He joins us live in the studio now. Klaus, thank you very much indeed for speaking to us. So, what did you make of the way Axel Weber is starting to position himself as ECB successor?
Well, I think, first of all, one has to be a little bit careful. Not every utterance of his is aimed at securing his succession. And, the succession of the ECB president is a very political decision that is taken by the heads of state, not so much by the ECB. However, I think he did have a conciliatory tone in his whole comments, and he was, of course, somewhat rather surprisingly dovish. Weber is not normally known as someone who's very dovish, and he, of course, was speaking after a very robust performance. So the comments that he made about monetary policy, in particular, maintaining a very stimulative policy by arguing that the ECB should offer unlimited funds at fixed rate, even in 3-month maturities, beyond the time that was promised previously, clearly set a precedent. And that was, I would say, the key comments that he made. And those that expected a return probably quickly changed their forecasts.
And interestingly, in May, Weber publicly disagreed with the ECB's decision to buy bonds from Greece and other weaker euro members, saying that that there were considerable risks to that kind of policy. Now he's saying that government bond purchases played a very limited role in restoring market stability. What do you make of those comments?
Well, I think he definitely was trying to mend some fences here.
Yeah.
And I think that in the public discussion, there was really too much of a contrast drawn between Weber and Stark on the one hand and the other council members. Even the members that are regarded as more dovish had a hard time with that decision because, of course, it does completely blur the line between monetary and fiscal policy. And there are, in particular in Germany, but also other countries, severe reservations about what could have been seen as a monetization of public debt. But I think his comments there were very much an attempt at mending fences, and in a sense what he was arguing was largely borne out in reality, in that the ECB bond purchases were indeed very limited.
And it's interesting, does this in a way encapsulate the way the role of the ECB itself has evolved, that the line between fiscal and monetary policy is becoming blurred in a way?
Well, it has become blurred in the course of the crisis, absolutely. And I'm sure that the ECB will hope that that division is going to become clearer once the intense sovereign debt crisis, which of course had a direct impact on the banking market and the banking sector, that is the area that the ECB is responsible for, that that line will become a little bit clearer in future as markets become convinced, hopefully, that the consolidation efforts are successful.
Of course, on withdrawing lending measures to European banks, Weber indicated that discussions on an exit strategy should take place early next year in the first quarter. Does that sound about right to you?
It does. It sounds to me a little bit even slower than looked likely previously. With the strengthening in the economy, I wouldn't have been surprised if the ECB had reverted back to variable rate tenders, at least for 3-month money, into next year. That now, if Weber argues, and he did strongly, to extend those into next year, I think that's likely to be the ECB's line too.
Klaus Baader, thank you very much for your thoughts, your analysis, Chief European Economist at Societe Generale. Appreciate your time.